This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Thank God it's Friday. That's the mood here in the studio. That's, I think, the mood everywhere as well as we head into the weekend. Last day of the week. This is Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, as always, with me, my colleagues Sonia and Nigel. Guys, morning.
Morning. I promise you, I've never heard you this enthusiastic on any other day of the week.
Then I was feeding off the energy. TGIF, right?
Oh, that relief, now more than the energy, I think that relief about the end of the week. But it's been a long week. The market has, of course, done very well. 4 days of record highs, but so much news flow as well. And finally, it's the ultimate day of the week.
Well, it's been green on the screen, and Sonia's bringing some red on the screen for today by attire. But I mean, what a move yesterday. Spectacular move, right?
No, absolutely. And, in a way, we were saying this, talking about this yesterday, that wait for the market to tell you that either it breaks. It could have gone either way, but then the market sort of chose to do what it did. Sharp recovery from the day's lowest point, and we finally broke above. I mean, we broke above Wednesday's high, which is the more important thing. We didn't close above it, but we broke intraday above 22,249, which is Wednesday's high. And that is significant because price action now has confirmed. We were talking about yesterday morning how this feeling has been festering for a while that the market perhaps wants to take a bit of a break, wants to go sideways. And those are important near term if you're trading. So let the price action tell you that it's in still solid shape and the market basically wants to head higher, even in the near term, without any sort of, two ways about it. And that's what the market did. So you had 22,217 by close after that very strong pullback from the day's lowest point. Overnight, and I wonder whether we kind of built in some of this yesterday because, US futures were trading, NASDAQ was up, etc. And I think some of it we priced in day to day is what I'm talking about. But look at this, record highs on the Dow, record high on the S&P 500, record high on the NASDAQ 100 index as well. 3% of the NASDAQ. Yesterday morning we started with the question, can NVIDIA spark a rally in US markets? And that is what it has done. And that has been true not just yesterday, but for the last many quarters. The first time NVIDIA did this was, the 26th of May when they reported those set of numbers where it was the largest ever beat in the semiconductor sector. The poster child is NVIDIA, and it's sort of added 17% at yesterday's close. So that's a huge move. There was data as well, data which basically told you that things are going good. Confidence in the economy, labor market, etc. is, pretty all right. So weekly jobless claims is that data, and the fall there was lower than expected. And it talks to the labor market resilience. There was Fed speak, which was again hawkish. So there was Fed's Harker, who basically cautioned against cutting interest rates too soon. So, data strong, Fed slightly hawkish. It could have been read either which way, right? But I think the fear of lesser than expected rate cuts was overshadowed by this strong FOMO in tech-related stocks. You look at Meta, it was up about 4% last night. You look at Amazon, you look at Microsoft, you look at Tesla, of course, 1.5% lesser so. But, strong moves. And this is 25% of the US market and a strong say in what the indices do there. Both the NASDAQ, of course, but the S&P 500 as well. The 10-year was up just 1 basis points. We were at about, 4.3%. The dollar index is trading just under 104 levels. Oil prices around the $83.5 per barrel mark. So this is all, looking pretty okay and not very different from where we left off. Some of these macro indicators from where we left off over the last 2 days now. Now, the question about what we do here today, right? So the Nifty's rally in part yesterday was perhaps, I would say, in anticipation to a very strong overnight US action. Many were watching that. I mean, we were talking about this NVIDIA effect to the broader ecosystem there. So maybe some of it is built in, but having said that, given the fact that the Nifty bounced off, it didn't even get to 21,800, which was the support we were talking about. The low was 21, we fell short by about 60 points. But it's negated this down move, and I think it heads to 22,538. That's the immediate sort of target that we're looking at on the Nifty. So basically 22,500, 22,500 plus. It should complete on the move up. On the downside, the supports come in at 21,875, which is the low, and 21,647, which is the 40-day hourly exponential moving average. These are support levels. Now, again, the script goes back to trying to buy the dips, finding the dips intraday and then trying to buy it because the market's given you a signal that it wants to head higher without a break. For the Nifty Bank, we are still not, we're still below the previous high, which is 47,363. That is point number one. It's bounced from the 40 hourly exponential moving average yesterday. And yesterday's low, which is 46,426, will be an important support level. The index, of course, ended about 0.25% lower. And it underperformed what the Nifty large cap space has been doing. The GIFT Nifty will come up on your screen. It's up about 70 points. I mean, so you can just hope that at some point it flatlines and you get a bit of a dip, because this looks like it's headed to about 22,500 at least. Sonia.
Oh, absolutely. I mean, this is a really, really good situation that the market is dealing with, right? If you're a bull, that is. A buy on dips is something that is absolutely working in the market's favor. And I think that's going to be the trend for the next couple of days as well. The buy on dips theory. Remember, it's the fourth day of record highs that the Nifty has seen. And the buy on dip strategy is something that has worked through and through in the last 1 month. In fact, yesterday, the Nifty recovered 375 points from the day's lows. And, you know, the most important thing is that the Nifty has now held on to that support of the 20-day moving average. And this 20 DMA is a very powerful tool for the market. The reversal is something that the market has taken with both hands, and it just validates the fact that every dip, if you go ahead and buy it, it sort of, you know, helps you with good returns. The S&P 500 also closed at a fresh record high yesterday, so keep an eye out on that. The two pockets that are seeing buying interest, realty and autos. In fact, you know, autos had a little bit of a dithering in the last couple of days, but that was bought into yesterday. Realty index as well closed about 0.5% higher yesterday. A lot of realty stocks did well. And there was large buying yet again from domestic institutions. So DIIs bought about 1,820 crores in the cash market. So good going. The market strategy continues to be buy every dips. And today as well, it's indicating the start will be well in the green. Good numbers coming in. Of course, Nvidia once again surged about 16% of a strong Q4 earnings. And, you know, that was continue to be the big talking point in the global markets. But for our own markets as well, just keep an eye out on these rate sensitives, realty, autos. Maybe there could be some more traction there.
Well, that's right. And yesterday had a bit of symmetry that played out, right? Because we hit the 22,222 on the 22nd of the second month. You know, so that was a data point that came out as well in terms of symmetrical correlation that did play out. Well, besides that, you know, a few other things that we did take note of. In yesterday's trading session, you had the Nifty. Well, it went ahead and it made a fresh all-time high. And if you look at the Nifty, it's making fresh all-time highs, but it's leaving the Nifty Bank behind. And remember the Nifty Bank, well, it hit a fresh all-time high sometime towards the end of December. So the Nifty Bank is still 3.5% away from those fresh all-time highs. If that can get its act together, that's what will propel the Nifty even higher towards that 23,000 odd mark. The problem over here is HDFC Bank. That's been, dragging. That's why the Nifty Bank is underperforming. But yesterday, all through the trading session, you had select stocks that did well. And the advanced decline ratio tells you the story out there. Even when the Nifty was low, you had the small cap index case in point that was trading well in the green. But the power of short covering is coming into play. Even in yesterday's trading session, there was massive short covering. You had some long addition as well. And just pull up the chart, to show you the kind of short covering that we've seen in this series. The Nifty is up 865 points in this series itself. And take a look at the shorts. From around 78%, it's come down to around that 65% approximately. In fact, even lower than that. And you have the Nifty that's been gradually moving up as well. Well, if you want to put it in absolute contracts, you look at it from around 108 lakh contracts, we're down to, close to around 55,000 contracts, 34,000 contracts actually, as of last count. Yesterday, we did see a fair bit of writing as well. 21,900 put, 22,000 put, fair bit of writing out there. So let's get to the support levels. On the Nifty itself, you have the 20 and the 50 DMA if you want to look at reference points on the downside. And for the Nifty Bank, you look at yesterday's low. You know, that's the important data point that you look at. And the 50 DMA, somewhere in that vicinity. If it breaks these levels, then you're looking at the 20 DMA. But for the time being, these will be your near-term support levels. The stocks that focus on today, I think Vodafone Idea as well as Indus Stars, they could be the stocks of the day, post the commentary that came out from Mr. Birla, and also the notice that came in later that they could be looking at raising some money. So Vodafone Idea, that'll be the stock in focus, obviously, if they can come up with the required money. And if Vodafone Idea survives, then in fact, Indus Stars is normally the play. So both these two stocks are going to be the focal points.
All right, thanks a lot for that, Nigel. Let's do one thing. Let's get straight to the show. Let me tell you what's lined up in the first half hour. We'll get you updates from the markets across the globe. Cameron Brand, the Director of Research at EPFR Global, will be with us to discuss the global trade setup. Later, our research team will be bringing you CNBC TV18's list of top 10 stocks for the day. At 8:30 a.m. this morning, we will do a fundamental stock analysis with Nishchal Maheshwari of Centrum Broking. But first up, on the equities front, we have Chris Wood of Jefferies, who says that greed and fear continues to believe that India is the best equity story in the world on a 10-year view. Still, it is only fair to acknowledge that many investors they have met in recent years also make the point that the returns in the US dollar terms have not been so good. As for Asia ex-Japan long-only equity portfolio, the investments in SBI, Samsung Electronics and TSMC will be increased by 1 percentage point each, and these will be paid for by reducing the investments in Capricorn Metals, Reliance Industries and HDFC Bank by 1 percentage point each. So they have reduced their exposure in some of the larger names like Reliance Industries and HDFC Bank.
All right. Well, specific to India portfolio, we have Jefferies' Mahesh Nandurkar, who's listed 26 top buy ideas and some stocks that they're bearish on. Top buys include the likes of ICICI Bank, Axis, State Bank of India, TVS Motors, Coal India, Larsen & Toubro. They're also positive on some mid-cap names. JSW Energy finds a mention. There's Godrej Properties, Macrotech Developers, Zomato, Honasa. The rest of the names on your screen, while the top underperforming ideas are Tech Mahindra, Asian Paints, Gujarat Gas, HPCL, Lotus Laboratories and Biocon.
Okay, let's also get you some money market views and tell you how to approach the rupee now. Lakshmanan V of Federal Bank says the FOMC meeting minutes were hawkish as members await further data points before cutting rates with inflation resurfacing and tight labour markets. The rupee strengthening during the week on account of foreign inflows while other major currencies consolidate. He expects the rupee to remain slightly volatile and trade within the range of 82.66 to 83.10 in the upcoming sessions.
All right, on bonds, we have Lakshmanan V, who says that US bond yields rose with a 10-year yield staying above or near the 4.3% level. This is after the minutes of the Federal Reserve's latest meeting showed policymakers were concerned about cutting interest rates prematurely. RBI's MPC minutes were largely along expected lines, with most members raising concerns around food inflation and emphasizing the need of bringing inflation closer to the 4% target on a durable basis. In coming sessions, he expects the India 10-year to trade between 7 to 7.15%. All right, we have Cameron Brand, Director Research at EPFR Global, joining in. Cameron, great to have you with us here on the program. Thanks very much for your time. What a move last night. I mean, usually I start with a question, Cameron, on the state of flows, right, to India and what happened, emerging markets, etc. But just sort of a quick comment on what we saw. Nvidia has done this for like the last 2 or 3 quarters now, right? Sparked a big rally in US tech stocks and consequently to in the broader US stock universe.
No, it's true. And certainly what is different at the moment compared to the dot-com bubble, which obviously some comparisons do sneak in from time to time, is that the major drivers at the top end of the tech spear, tech arrow, have a much better history of generating actual profits. So it was certainly a waypoint that the market was happy to get, it suggests that this rally still has some legs.
Okay, this rally still has some legs. Cameron, thanks a lot for joining in. We are seeing a large, amount of retail participation come into the Indian markets, especially from the domestic fraternity. How are you reading into the flows into India, and what is your own prognosis of how things may move from here?
The flows into India, certainly dedicated India mutual funds, might best be described as relentless. We're getting on for nearly a year's worth of continuous weekly inflows. They remain at a very high level, generally above $500 million each week. Investors are becoming sort of more individual market oriented within the emerging markets universe. And I say that despite some inflows to gem funds this week. And sort of honestly, the best holistic story out there at the moment in the EM universe is India.
Hi, Cameron. Morning. What about China?
The best combination of growth.
Okay, got it. So, okay, all right, Cameron, I think we lost you a little bit out there, but you said that the flows into India continue, which is good news from our market perspective. What about China? You know, post the new year, how are things panning out there? Is there some kind of flows that are moving out there at these valuations, or it's still what it was in the past?
You know, we're seeing inflows to China equity funds, but they certainly weren't those sort of spikes we saw earlier when the authorities were moving aggressively to put a floor under the market. We've obviously seen some modest upturns in the key Chinese indexes. So I'll be interested to see if the money aggressively follows that run up. But so far, you know, flows to China equity funds, while positive, are still very domestically driven, and you know, we're fairly modest in relative terms this past week.
You know, Cameron, just one quick point, right? I mean, that tech and the concentration that you alluded to, the .com period, etc. You know, the top I think 7 names in the US now is about 25% of the US market capitalization, right? As someone who's seen this
That's right.
for the last 25, 30 years, Cameron, you know, even, I don't think, I mean, the concentration back then was much lower. We had, some would say, a much bigger rally back then in tech stocks, but concentration was much lower than where we are now. Is it an important data point to watch? In what way, really?
It's important then, obviously, that you know, a concentration like that means that moves within that group of 7 have an outsized impact on the overall market. And I do sort of look around and think, what are the other drivers of the U.S. markets at the moment? And they're fairly thin on the ground. You know, defense stocks are certainly getting some interest, but Boeing's troubles have somewhat.
Sure. I think we're having some issue with your video. We're going to do one thing. We're going to thank you on that note. Thanks for giving us your thoughts. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks is lined up. So do stay tuned in for that. Hello and welcome back. Well, our entire research team is standing by to give you the list of top 10 stocks. So let's go straight to Rima first up on the Vodafone Idea board meet and what the key takeaways were. Rima, morning.
Hi, so the board meet is actually scheduled next week on the 27th of February. And yesterday, the stock was actually quite excited. It was up nearly 6.5%. Now, remember, the company has been trying to raise money for a long time now via lenders, investors. You know, they've had to renew their enabling resolution multiple times. But this time, considering they've called a board meeting a couple of days in advance, it looks like it will happen this time. Now, the question is, what will be the extent of, you know, the fundraise? And will the promoters be participating? Because Kumar Mangalam Birla has been talking about, you know, that the promoters are committed to the business. In fact, in the past, he'd also talked about the promoters willing to invest close to about 2,000 crore in the fundraise. The debt on the books is high. Any fundraise, the larger the fundraise, the more positive it is for Vodafone Idea, the more negative it is for peers like Bharti Airtel, because the larger the fundraise will enable the company to go ahead and launch its 5G business. So this is going to be one crucial board meeting scheduled on the 27th of February. That's next Tuesday. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, let's get in Nimesh to talk about Eureka Forbes as well as RBL. Massive large trades is what we saw yesterday. Nimesh, morning.
Morning, Nigel. So I'll start with Eureka Forbes first. A confirmation of the private equity investor was a seller in the status block deal. So nearly 9% equity got changed hands. They were the sellers. In terms of buyers, some marquee names have bought, both from the DIs as well as some large long-only funds as well. Having said that, the stock ended at day's low, and that is largely because I understand there was a small part of a leakage as well in that block deal, and hence the stock was lower. But given the names of large buyers at this price and the fact that the selling is over from that PE fund, I'll go with the green, but as I said, there was a small leakage, so that needs to be factored in the next few days in Eureka Forbes. So that's the first name. The second is RBL Bank. This is interesting. In the block deal data, Matthew Sirag has added another 32 lakh shares in the cash market. So now I understand, I spoke to him yesterday, the feedback is now he owns close to 3% in RBL Bank. Remember, there's been a lot of chatter as well with regards to fundraising and a lot of other corporate developments as regards to RBL Bank is concerned. The stock is in F&O band, but looks like in the cash market, there could be some more activity on the back of a big name adding further into RBL Bank.
Thanks a lot for that, Nimesh. Appreciate it. Eureka and RBL Bank. Well, I'm looking at Sona BLW this morning. Now, the company has received the PLI certification for hub motors for electric two-wheelers. So, they've filed for 7 different products under the PLI scheme. It has received a certification for its first product, which is hub motors, which will be used for e-two-wheelers. It's a part of generally traction motors, controller segment, etc. It's a small portion of their business. I mean, 5% of their first half FY24 revenues comes from this traction motors. But the PLI incentives that they are getting is about 13% of revenues, and that should support their margins depending on the retention ratio. So on the back of this PLI certification that they've got, I'm going with green over there. And Sona BLW, in any case, has been a strong stock in its sector.
Okay. All right, Sonia, thanks very much for that. Well, let's move on. Financial services space now. India Bulls and Jana Small Financial Services will be in focus. Abhishek has got details. Abhishek, morning.
Morning, Prashant. To begin with, Indiabulls Housing Finance, their right issue was priced around 150 per share, which is a discount of 20% to the CNP of Indiabulls Housing Finance as well. So, company raised about close to 3,700 crore via right issue. It will be closely watched today because there is partly listing of this right issue. So, we need to see whether that is at a premium or at a discount with respect to current valuation where, Indiabulls Housing Finance is. In terms of result season, Jana Small Finance Bank has come out with their Q3 FY24 numbers, which looks pretty decent. NII growth is at 24.4% YOY and about 4.3% sequentially. PAT growth is about 12.8% YOY and about 9.5% sequentially. The net interest margin for 9 months has actually expanded on a YOY basis, and even compared to H1, it's expanded to about 7.9%. Deposit growth is pretty robust at 36.5% YOY and about 9.8% sequentially. AM growth remains healthy YOY, but sequentially is just 2.5% growth over there. CASA ratio in line with industry trend, it continues to decline. The asset quality has improved. Gross NPA ratio is down to 2.2% when compared to 2.44% in the previous quarter. Even the net NPA ratio has improved on a sequential basis. Back to you.
Okay, all right, Abhishek. Thanks for that. Well, let's go to Vamakshi to tell us some more stocks in the news.
Well, absolutely. Let's first start off with Angel One. The company has announced that it plans to raise nearly 2,000 crores to tap opportunities in the fintech space. Now, this fundraising could be done through a whole lot of modes, preferential issue, FPO, or by QIP. And in fact, the company has highlighted that it plans to offer distribution of credit and fixed income products. In fact, they've also said these offerings would actually strengthen the company's super app as well as boost growth for them. And they will also be seeking approval of shareholders through an EGM that is scheduled on March 15. So on the back of that, keep an eye out on Angel One. But apart from that, let's also focus in on PFC. The stock will be on our radar because they are expected to consider fundraising proposal for the next financial year on February 29th. And lastly, let's also focus in on Tata Elxsi. The company has formed a strategic partnership with Accunox. Now keep in mind that Accunox is a California-based cloud security solution provider, and this partnership has been signed for 5G managed security services for operators. So largely on the back of that, keep an eye out on Tata Elxsi as well.
All right, thanks a lot for that. Here's a quick recap in case you missed out on any of these stocks with positive news flow. Vodafone Idea, Indus Towers, Eureka Forbes, RBL Bank, Sona BLW, Indiabulls Housing, Jana Small Finance, PFC, Angel One and Tata Elxsi. And there's no stock that's likely to open in the red today. Well, that may not happen. I mean, there'll of course be a lot of red stocks. But in terms of news flow, a lot more positive than negative news this morning. But Manisha Gupta joins in for a roundup of all the action from the commodity market overnight. Manisha, good morning.
Morning, and thank you for that, Sonia. I'll start with the crude oil prices, which are holding above $83 a barrel on smaller than expected storage build at a tune of 3.5 million barrels. So while the crude prices are doing good, can't say the same about the crude product. So if you look at heating oil, gasoline, all of that has been trading in the negative. The biggest declines coming in for natural gas. That fell 5% overnight and is down 30% in this year until now. This is because the storages are 22% higher than the seasonal normal right now, and that's weighing onto the markets. When you look at the metal prices, well, it's quite a mixed cues that you're getting in from that. The China new home prices have seen a decline for an 8th month in a row. The sales for the new homes in China also has declined 34% on a year-on-year basis. While the only positive that comes out of this is that the markets believe that China will have to come out with more measures, more stimulus when it comes to the property sector, is the reason perhaps that copper is trading in the positive. But a very sharp decline in zinc prices, which has declined by 10% in this year until now because of oversupply and lagging recovery.
All right, Manisha, thanks very much for that. So that's commodities in focus. We'll come back with Nishal Maheshwari of Centrum Broking. Stay tuned. Lots of stocks to discuss, and of course, take a pulse of what can be the NVIDIA effect here in India, if any. That's the conversation coming back.
Welcome back to Bazaar Morning Call. Hope you're having a good morning. Well, let's get a few more brokerage notes going. Sudarshan's been reading all of them up all morning. Sudarshan, tell us, what are the notes you're focusing on today?
So in the brokerage corner today, I have first Macquarie on Bharti Airtel. It has a neutral rating. Target is rupees 1,060 per share. Macquarie says, as per reports, Carlyle is looking to sell its data center stake, and it's looking at a valuation in the range of $850 to $900 million against its acquisition valuation of around $235 million. Macquarie says, enterprise business of Bharti Airtel accounts for 16% of the target based on 10x FY25-26 EV to EBITDA, but reported deal valuation for the data center is implied at 20 to 23x FY25 EV to EBITDA. We have a few reports on Grasim after the launch of the paint business. First one is Morgan Stanley. It has an overweight call. Target is rupees 2,430 per share. It says management aspires to be profitable by FY28, and if executed, it could unlock material value for the standalone business. Execution over the next 12 months is a key. Jefferies says it has a buy rating and target is raised to 2,600 from 2,291 per share. It says it is positively surprised seeing the scale of launch of the paint business, and run rate trend on the paint business revenue and profitability will be key for the stock. Last one is Morgan Stanley on Samvardhana Motherson. It has an overweight call. Target is rupees 133 per share. It says company is seeing rising share of premium vehicles will support growth, and exports, which form 22% of the standalone revenue, will also be a key growth driver, and companies seeing traction from sectors such as aerospace and defense, and peers guiding for margin expansion and Q3 core income beat drive the overweight rating of Morgan Stanley.
Okay, Sudarshan, thanks a lot for that. Very helpful there. All of the big stocks that are in focus. Nishal Maheshwari is joining in to give us his view. He's the CEO, Institutional Equities and Advisory of Centrum Broking. Nishal, hi, good morning. You know, it is actually quite surprising to see the scale at which Grasim went and launched their paint business, right? I mean, just seeing what happened yesterday would sort of inculcate some fear in the incumbents for sure. But how do you see this entire thing play out? And for people who have a fairly large position in names like Asian Paints, etc., what do? Do you churn out now?
Morning, Sonia. I think this was expected. You look at the Aditya Birla Group, basically, Kumar Mangalam Group. I think they are large as far as all commodities are concerned, and they are number one, number two players everywhere. And I don't think so they would stop it unless they hit a number. I'm saying number one would be a difficult one, but number two or number three, I'm saying in the top 2 or 3 players, they would want themselves to be there. And I think that's the kind of investment they have done. They have large pockets. So it was sort of expected. Now, look at the way the business is basically. Initially, I think Grasim will go after price, basically because that's the way they will get market share. So in the short term, the whole industry will suffer as far as margins is concerned. Because till Grasim gets its market share or the targeted market share, it will continue to drive it and possibly take losses. That's the way, if you look at it, when Jio came into the mobile market, it continued to drive it till it achieved a market share of 40%. So I think Grasim must have had some target market share in its head, and basically that's the way they are going to drive it. So in the short term, I think it's an avoid for the sector. Wait for better prices, even in Asian Paints, to buy back. So I think at the moment, I think one can book profits in Asian Paints.
Okay, book some profits in Asian Paints. Hi, Nishal. Good morning. Nishal, I want to ask you about Vodafone Idea as well as Indus Towers. But before that, let's play out this bite coming in from Mr. Birla himself. He sounded quite optimistic on Vodafone Idea, and later we understood that they're going to be considering a fundraising plan as well. Let's hear him out and we'll come back and get your view.
We remain very committed to Vodafone, and like we've said in public domain, efforts are on to get outside investors. And I don't know what's prompting your question. I think we remain as committed to it as we have been in the past.
Okay, all right. So that's the word coming in from the promoter himself, saying that they remain committed and now they're looking at some fundraising as well. But they've got a mammoth debt in there. Nishal, how would you approach Vodafone Idea? Do you think you would look to buy it? And also the other play that you have on Vodafone Idea is Indus Towers, because if Vodafone Idea survives, then Indus Towers gets its required money. Your view?
I think Vodafone is an option value, basically. It is 0-1 kind of a situation. I think they are sitting on such a pile of debt. It will be difficult for them to get through this until they get massive investment. I think the management is looking for it, and they are clear themselves that they are not going to invest more. So I think it's a catch-22 kind of situation. As an investor, it's totally an option value. I wouldn't be saying that this is an investment opportunity. So I'm saying line-hearted players can look at it and maybe take some positions out there. Obviously, the upsides are huge. If you get the right investor, amount of money they need to spend and all that, I think obviously Vodafone can be a multi-bagger from here if all things turn out right. But that's a very big if. I think on the Indus Tower, it's again same kind of a situation. Except for that, it's cheap and one can buy on dips.
All right. Okay. Got that. Nishal, hi. Good morning. Let's just talk a little bit about banks. A lot of conversation around that. Private bank, the rally happened and it's starting to fizzle already. I mean, it's not even a proper move, right? I'm talking about private banks there. PSUs, and we'll put this out in a bit, but there are some downgrades from Goldman Sachs on names like SBI, etc. So just wanted to understand what your top preference is in this space.
Morning, Prashant. I think I would prefer the private sector banks, basically, and that's what my call has been. Not worked out till now, and PSUs have done really well. We were positive on PSUs last year, but I think at some point in time, most of them, the undervaluation is gone. Easy money has been made in the PSUs. Now, if they continue to perform, and the question about PSUs is basically is those ROEs which they are showing in the last few quarters, is a sustainable ROE? That is the question, basically, because you have not seen one cycle after the 12 and 13 debacle. This is the first cycle where the asset side books are getting built up, and one should see through that cycle before saying that, yeah, it's a sustainable ROE. So I would avoid PSUs at the moment and prefer the large cap banks. Our top pick there remains to be ICICI Bank, Axis and HDFC in that sequence.
Okay. I wanted your thoughts on a couple of these names in the defense/space sector, right? After the 100% FDI in space sector was allowed yesterday, there were some of these companies that moved. Whether it's MTAR Tech, Data Patterns, Bharat Electronics, Cyan DLM, the problem here is that valuations are very uncomfortable compared to historic. But do you see any scope here for retail investors?
See, Sonia, the sector has got great potential, basically. There is no doubt about it. It's opened up to the private sector, and I think as we go along, I think a lot of orders will flow. But at the moment, I think they are discounting way beyond the foreseeable future. So that's why I think it's a sort of an avoid. The only stock which I think I like there is BEL, where there is a strong order book basically, and I think government's commitment is also very high on that sector. So visibility is very high for BEL. So among the 3-4 of these stocks, basically, I would only prefer BEL to be bought, but that too also at on a correction.
Okay, so that is on, you'll buy these stocks on a correction. Got it. Very interestingly, there's a lot that's happening in, this entire new age technology space as well, right? This morning, Citi has initiated a buy on Honasa Consumer. We've seen Zomato at fresh highs. As of yesterday as well, Zomato hit a fresh record high. Anything in this space that you like?
So Honasa we don't cover, but yes, Zomato, PB Fintech has been our picks there. Similarly, basically we like eMudra. That's another stock basically which we like. But I think others have run up quite a bit basically, so avoid. Some of them like Paytm and all, we don't, I think it's a clear avoid out there, so we do not want to, because their business model is still not clear, so we would want to avoid that. But I think these are 2 or 3 stocks which we prefer. Honasa, I think on a correction one should look at it. It's in an old industry, but strong growth. So definitely, I think worth a look, Honasa.
Okay, all right. What about some of these aluminium names? You know, in India, from the listed companies, you have 3 basically to play. One is Nalco, which valuation-wise has gone out of whack. It's the highest I've seen in the last 10 years or so. You have Vedanta that has promoter problems, at that level, but they're looking at sorting it out, and it's the cheapest. And you have Hindalco, which the street is wondering why they're raising this money from Novelis. Among the 3, what would your pick be?
I think, Nigel, there it's very clear. Basically, the other 2 have a lot of issues. So I think the top pick still remains to be Hindalco for us. Yes, there is a question mark why they're raising that money, basically. But I think it's sort of what I understand in my discussions with the management is sort of a war chest, basically, they are trying to build up and trying to see if they can get assets abroad. So I think that's the way, basically, they want to go about. And Novelis itself will become a separately listed company on its own and has its own strengths. And the war chest, basically. So that's the way, basically, we look at it. So we are positive on Hindalco. Obviously, Vedanta, because of its cheap, the second pick, and the third is obviously Nalco because of high valuation and checkered past. So that's the way, basically, we look at it.
All right, Nichal, we'll take a quick commercial break here. We'll come back and continue this conversation. But Anuj also will be with us with a quick eye on how things are going to pan out today. Our technical and F&O experts also join in with specific trades. Stay with us. Okay, welcome back. There's 15 minutes to go for market opening. Anuj is here with how he's looking at things. Anuj, good morning. What a move last night, right? I mean, 3% on NASDAQ.
Absolutely. Good morning, Prashant. Or shall we say good NVIDIA morning. It's that kind of a day. Just to put things in perspective, yesterday NVIDIA added 1 Reliance in market cap. Almost 100 countries GDP in one day. That's the kind of move that we had, and that led to that global Qs being better than expected. And I guess some of that was factored in with our last 1 hour move, the way the Indian market was moving in last 1 hour. It was perhaps trying to preempt that. And what we did also yesterday was we respected the sanctity of 20-day exponential moving average. When that happens, that gives you a sacrosanct level to work with, 21,875, which was higher than the 20-day of 21,864. So yesterday's move has once again reaffirmed the texture of this market, the larger texture of this market, which is buy on dips, though there have been some warning signs as well. Let's not forget that intraday at one point the Nifty was down 200 points, and some big flying stocks like the oil marketing companies, some of the power PSUs, they have seen some shakeout. So let's see. It's not as one-way move as it has been for last few days. Coming to Nifty outlook, then the Reliance and IT stocks, it looks like they are taking that leadership back after that two-day move from the bank Nifty. The next resistance on the Nifty is 22,560 positionally, and of course the big support now is 21,875, yesterday's low, and 20-day MA again positionally. On the bank Nifty, the problem is HDFC Bank is back to square one. It's given up all its gains in 2 days flat, and maybe the bank Nifty starts to underperform once again. But guys, today is Friday, so I'm leaving you with something nice. Today is Cinema Lovers Day. And that means that you get to watch movies at 99 rupees. Now, I'm traveling, unfortunately, but after Editors Roundtable, maybe you want to catch a movie that you may have missed just for 99 rupees.
Okay. Any of you? Any takers?
There's a very nice Malayalam movie, by the way, running in theatres in Mumbai. Actually, I was wondering because how are tickets at $100? But it's just for today. Just for today, Cinema Lovers Day. And that's why.
But what
that's
about
the trivia you didn't
popcorn?
know. So that also is going to be cheap, but still, you know, Sonia, at 99 rupees, if nothing, just go out there and just have a nice, peaceful sleep, if nothing.
All right, Anuj. Also, I want to leave you with one fact that after the move that we saw in NVIDIA in one trading session, right, it made Jensen Huang, who's the co-founder of NVIDIA, it made him $10 billion richer in one single day.
Wow.
Now no one's feeling good anymore.
We'll focus on the 100 rupee tickets.
We'll focus on the 100 rupee tickets. All right, thanks a lot, Anuj, for that. But let's go across to Mitesh Thakkar and Shrikant Chauhan of Kotak Securities, who's joining in now to tell us how to approach the markets. Mitesh, hi, good morning. It's been a great run for the market, right? 4-5 days of record highs. Do you think we can build on to that today?
Good morning. I think looking at the US markets and the GIFT Nifty, there's a good chance that we'll open above the earlier highs. Now, that should suggest continuation. I think the near-term targets for me would be closer to about 22,450, 500 on the Nifty, and then we'll take it from there. And any intraday dips, if it happens after the gap up opening, I think I would want to buy it. Let's say if you open about 70, 80 points higher, and then you get some kind of a dip to about levels of 22,000 and 250, 240 zones. Buy with a 60-odd point kind of a stop loss for another 200-point kind of a rally.
Okay. Gentlemen, good morning. Mitesh, welcome back and good to see you. I hope you're feeling better. Shrikant?
Thanks. Thank you.
Good to have you back. Shrikant, what about you? How are things looking? I mean, up and away, or do you think yesterday's last hour and a half kind of, preempted some of the move? Because, I mean, Nasdaq was trading, futures were surging. And there was a general sense that it's going to be perhaps a big day, maybe not a 3% kind of day, how it turned out, but big nevertheless. Your sense?
Yeah. Good morning, Prashant. Good morning, Nigel and Sonia. I think, yes, yesterday's move was like on the back of, especially, I feel it was mainly because of short covering, because it was not at all expected that the market can cross the level of 22,200, where there was huge amount of call writing. But it has broken that also, and we saw then the furthermore activity in the market. But while looking at the entire setup of the market, now the supports have shifted from 21,700, 800 to now 22,000. So now 22,000, 22,100, which are like very nearby levels, they are going to act as major support for the market. And based on the technical formation and extensions, I think the market is heading for at least 22,500 or 600 in the near term. So the final target in this particular up move that we are seeing is 22,500 plus. And for the Bank Nifty, there also we saw substantial recovery from the lower levels. Technology stocks are also supporting. So maybe I think if there is any correction, then certainly we should look for adding positions. But if there is a positional view, then even at current levels, close to 22,250, we should be buyer in the market.
Okay, what about individual stocks? Shrikant, what are we looking at?
Yeah, see, like a couple of stocks, they are like really doing well and they are absorbing selling pressure, Sonia. So in that specifically, we like Indus Tower, which is actually banned in the FNO segment because of its market-wide limit. But if we just see the overall technical pattern, then I think in the cash segment also we should look for adding positions. It is heading for the levels of 240, 245. So Indus Tower should be on the watch list with a stop loss close to 215. We also like Datco Pharma, which has shown spectacular rally in the previous week. Now it is again corrected back to the levels of 1000, 1020. So it's a buy at current levels with a stop loss at 980. I am again expecting stock to move towards 1150 or 1180. And finally, from the technology basket, we like HCL Technologies, which is around 1680. There we are expecting 1800 sort of level in the near.
All right, thanks a lot for that. Well, Sneha Seth is also joining in. She's the derivative research analyst of Angel One. Sneha, hi, good morning. How are you feeling about the market now? And okay, I think, Sneha, before we come to you, yeah, go ahead.
I think we have Mitesh's picks as well that are pending. Mitesh, good to have you back and good to see you in. What are the picks you have?
Morning, Nigel. I have one stock which is common with Shrikant, that's HCL Tech. Keep a stop at 1665. Look for a near-term target of 1730. ITC, after a long correction and decline, is now coming on the radar on the buying side. It's giving some signs of early signs of reversal. So buy here with a stop at 410 for a target of 422 to about 425 to begin with. Over a reality, very similar kind of a chart setup. Keep a stop below 1355. Look for targets of roughly around 1445. And a buy on Indigo with a stop at 3090 for targets of 3200.
Okay, well, thanks, gentlemen, for that. Let's go back and speak to Nishchal Maheshwari on a couple of more stocks that he's looking at. Nishchal, I wanted your thoughts on, this whole NVIDIA, boom that we've seen. Of course, for investors in India, you can participate in NVIDIA through some of these funds that have exposure to the US markets. But what about the Indian AI-related stocks, right? Whether it's the tech names, something like a Tata Elxsi, Persistent Systems, Cyient, etc. Do you think it makes sense to put more money to work there?
So I do not have much handle on NVIDIA, but I think it's a totally different thing basically because it's into super chips. And the Indian companies at best, if anybody has exposure to NVIDIA and has got some work to do with them, is basically on the embedded software. I don't know if any of these companies are involved there, but I think some of the companies which we have named, yes, they are good at AI. And I think I would add Happiest Minds also out there, which has got the highest amount of work in as far as AI is concerned. So yes, AI is a big space. I think that's the next big space which is emerging. We are seeing that in the US, and US has been a precursor to across the world for technology. So here also, I think some of these companies will do much better. But I think the work from there to flow is going to take a bit more time than what we see today.
Okay, all right. That's basically the sort of move coming in there. By the way, I have to say this, and this is interesting, and we'll put some data out a little later. There is, of course, you could look at proxies to NVIDIA here in India, etc., or you can look at correlations. Lawrence Belanco a couple of days back made this point. He said that, actually, if there are 2 or 3 markets which almost run in the same direction and are highly correlated, are US AI, US large cap tech, Japan, and India. These are the 3 kind of sort of markets, and within that, we'll later put out data in terms of which are the ones over the last 1 year which are highly correlated on the way up and way down, single stocks, individual names, etc. So that's coming through. But I think we have Sneha Seth also joining in on the futures and options side with a quick word on how she's wanting you to trade things. Sneha, good morning. Good to have you with us here. So it's going to be a higher start. Are we hitting 22,500 before anything else? And what would you want to do? Buy the opening gap up or wait for a bit of a dip at some point?
So I would, with yesterday's smart recovery from 22,000 zone, so I believe we may head towards 22,500, 22,600, looking at the options activity as well. So I believe at this moment, if we have a gap up opening, we should wait. Any kind of declines, there we can go ahead and long. So I think there will be an opportunity to go long in dips.
Okay, go long in dips.
And individual counters?
Yeah, go ahead.
Yeah. Individual counters, I'm liking M&M. It has shown decent recovery yesterday. We have seen call writers exiting their position. So I believe we can go ahead and long this counter with a strict stop loss of 1870. Target expected is 1970. Apart from this, JSW Steel looks good. So with a strict stop loss of 810, we would recommend buying for the target of 872.
All right, let's do one thing. Let's take a short commercial break. On the other side of the break, we'll come back with the pre-opening rates and lots more coming through on the market. Stay tuned.
Okay, I think just about 10-15 seconds to go for the pre-open session is what we have right now. So lots to talk about. But I think, you know, the momentumizers is something that we sort of try and put to you based on fundamentals, technicals, volume and price action data. Rima is standing by with what's on the momentumizers pack today. Rima, hi, morning.
Thanks so much for that. So the stock on my radar is Mishra Dhatu, which was up nearly 10% yesterday. And with the up move, it crossed its 50 and 100-day moving average. In fact, the stock the last couple of days was a bit subdued because month to date, the stock is down 15% from its recent high, the 52-week record high level of 547. The stock has slipped 20%, but yesterday it moved up on pretty large volumes. So the volumes were nearly 3 to 4 times the kind of average volumes that we have, and there was a pickup seen in the delivery volumes too. So let's see whether the momentum can continue in Mishra Dhatu.
All right, thanks a lot for that. That's Mishra Dhatu in our momentumizers list. The pre-opening rates are settling higher, by the way. The Nifty is holding well above the 22,200 mark and Sensex above 73,300. One pocket to watch is the auto stocks. Yesterday, autos came back in a big way. So there was buying seen in names like Bajaj Auto, Maruti Suzuki. Even Hero is up almost 2.5% right now. So watch out for those names. And IT stocks, TCS, Wipro are all in the green as we speak. On the downside, the pressure once again is coming in from banks. So HDFC Bank, Kotak Mahindra Bank are a tad bit in the red. But otherwise, it looks like it's going to be a good start to trade. Nishchal, I wanted your thoughts on autos because, the run has been pretty good. Most of these stocks are at record highs. And now some of these spaces like EVs are also doing very well. TVS, for example, is at a record high. Any thoughts here?
Sonia, I would want to continue basically holding these stocks. I think there is a good way to go. You are just seeing the demand, especially in the two-wheelers, just coming up very strongly, especially from the rural side. I think Hero came up with a comment saying that they are seeing very strong demand from the rural. So there are two positive events likely to happen. One, I think if the rural recovery happens, it will be positive for not only two-wheelers but tractors also. The second thing is interest rate cut, and this is a big play on the interest rate cut basically. So likely to happen in the next 3 months, 4 months, whenever it starts off. And there is a long way to go if interest rates cut starts happening. So I think it's a play on both these sides. We should be invested into this sector and continue to hold it.
Stay invested in the sector and continue to hold it. That's what's coming through. By the way, Nishchal, again, we discussed PSU banks earlier for a bit, but the other part, which is oil companies, any thoughts? Because lately, at the margin, there have been, on the sell side at least, there is a little bit of caution being expressed. We had 2 brokers over the last few weeks downgrading their ratings, recommendations, etc. IOC, HP, BP particularly.
So yeah, oil marketing companies, definitely, I think it's time to take away profits. We are at the peak margins basically, and yes, oil has been benign at the moment for some time. Any event in the Middle East basically could make the oil run away, and then who knows basically whether they will be able to get the upside in the increase in the prices. So who pays for that? So I think that is the issue basically. We are at a good place at the moment. I think it's a good time to take away profits. GRMs have peaked out last quarter, so I don't see GRMs going up for them in the near future. So it's a good time to take away profits in the oil marketing companies.
Okay, well, as Grasim has forayed into the paint business and has launched the Birla Opus Paints brand yesterday, as we know, out of the 6 plants in the pipeline, 3 plants in Panipat in Haryana, Ludhiana in Punjab and Cheyyar in Tamil Nadu. Chairman Kumar Mangalam Birla says that they entered the paints business because of the opportunity in India's infrastructure space and paints business will cross revenues of 10,000 crores and will turn profitable in the third year of operations. They also plan to increase capacity by 500 million litres per annum over the next 5 years. So let's listen in to excerpts from that address by Kumar Mangalam Birla, and then we'll focus on some of the stocks again.
This paints venture mirrors India's zest for innovation and its refusal to settle for the status quo. Why paints, you might ask? The answer lies in the bedrock of our booming infrastructure, the construction segment. This sector alone is poised to command 9% of GDP, translating to about $900 billion in just about a decade. The Aditya Birla Group's deep insight into the building materials ecosystem, honed over the years, offers us a unique vantage point. Our journey into the paints industry, therefore, is in many ways a strategic extension, connecting the dots from the foundation to the facade of homes across the nation. We are driven by the vast opportunity presented as India's economy surges towards a $10 trillion milestone. Our vision is ambitious and our initial goal is clear: to clock gross revenues of 10,000 crores and turn profitable not later than the third year of full-scale operations. Despite the option to scale up gradually, Birla Opus chose to establish aggressively pan-India operations from the very outset. We are also prepared to increase our capacity by nearly 500 million litres per annum at our existing locations in the next phase, that too at a significant. Today I am pleased to dedicate to the nation 3 of our plants in Panipat, Ludhiana and Cheyyar. Our 4th plant in Chamarajnagar will start operations as early as Q1 FY25. The 5th plant in Mahad will roll out by Q2 and the Kharagpur plant will be commissioned by Q4 FY25. With an investment of more than 10,000 crores, we are building grounds up 6 state-of-the-art plants across India, and this is 40% of the total existing industry capacity built over the several decades. At 1,332 million litres per annum, our capacity in the very first year of operation will be greater than the combined current capacity of the second, third and fourth largest players in the industry.
Well, those are, big ambitions, but it's a big group and it's got so much distribution all over the country. Of course, that's the big one that they're banking on. Nishal, we did talk about Grasim earlier, but, the point is, what about the others? There's Asian Paints, there's Berger, there's Kansai Nerolac. It'll take time for this to show up in terms of higher competition and market share shifts, etc. But do you think this can do damage and anything actionable based on this?
No, I told you earlier also, Prashant, basically the only way they will attain these. So first, I think Grasim will go for market share. And the market share initially, history has shown us basically the market shares will come at a lower price. And that will damage the margins for everybody. So whatever we may say, I think, but margins will get compromised the whole industry. And that is going to create problems for all the players. So I think, and Grasim is a serious with deep pockets. So definitely it's going to go for a large market share. So I believe very clearly saying that in the next 3 years, Grasim would be the top 3 player in the country in the paint industry, and but at a cost of margins, and the whole industry will suffer in the next 2 or 3 years. So I think it's best to avoid the industry for the moment.
Okay, all right. We have, I think, a couple of minutes to go before the markets open for the day. So let's thank Nishal for joining us. Have a great weekend, Nishal. Thanks for being with us on the channel. But moving on, the Reserve Bank of India yesterday released the minutes of the meeting of the Monetary Policy Committee that took place between the 6th to 8th of February. Lata is here to give us key details on what came through. Lata, over to you.
Well, the minutes of the monetary policy were almost as expected. If anything, it reiterated that the Reserve Bank is in no hurry to cut rates. A majority of the members believe that growth is very good. I mean, the growth confidence exudes from especially the governor's comments. But he pointed out, for instance, his words, the last mile of disinflation can be sticky, which means the goal is to go to 4%, We are now at least 1 percentage point away from that, but that last mile can be sticky. He goes on to say we must not assume our job is done. Those were his words. Deputy Governor Patra was even more emphatic. He said inflation actually is the biggest obstacle to growth. So if you want to support growth, you must ensure that inflation is down, because he says high food inflation is killing rural consumption as people are using more money for food. And that's why he wants to persist with the removal of accommodation stance. And Rajiv Ranjan, the other RBI member, says that markets are already exuberant. And if RBI shows even a little softness, it will actually lead to higher asset inflation. So they are not looking like they're going to move anytime soon. The other two external members, Dr. Bide and Goyal. Goyal in particular sounds a little dovish, but both of them said that you have to persist with this monetary policy till you see inflation moving sustainably towards 4%. So that was 5 votes in favor of not changing the policy. It was only J.R. Verma who is very cogently and emphatically arguing that a rate cut is absolutely needed. Not much, he says, 25 basis at least, because if the forecast of inflation for next year is 4.5%, then the current rate of 6.5 is 200 basis points higher, which he says is a very high real rate. It is restrictive. So that's the sole voice. But however, you must note that Ashima Goyal makes a very important point. She's pretty unhappy that the Reserve Bank has not aligned the call rate to the repo rate. See, repo rate is not at the rate at which any of us work. The effective rate is the call rate, and RBI has a mandate to keep the repo rate at 6.5, but it has been at 6.75 for the last 6 months. So she is arguing that RBI should bring it down by managing liquidity, which is in any case, now it has moved towards 6.6. What are people taking away from it? Actually, people have pushed out their rate cut expectations. Almost everyone on the street, economists, are expecting it only in October, except for Nomura, which is expecting it a little earlier, I think in August. But basically, everyone is seeing it as an indication that the rate cut expectation should be pushed out to October.
Okay, all right, Lata, thanks a lot for that. Well, let's revise some of the top stocks that are going to be in focus today. Let's go across to Rima. She's here to tell us about Vodafone's meet that they're going to be having in the coming days. Rima?
Thanks so much for that. So Vodafone Idea's board will be meeting on 27th, where they will deliberate on all fundraising options. It could be a rights issue, preferential issue, or even a QIP. Now, the key here will be the quantum of fundraise. The company has been looking to raise funds for a while. They've been in constant discussions with investors, lenders, but the fundraise is not fructified so far. But now it looks like it's imminent. So the question will be the quantum of fundraise, the promoter participation. In the past, Kumar Mangalam Birla has reiterated that the promoters are committed to the telecom business, and they will infuse close to about 2,000 crore rupees. Now, if Vodafone Idea raises more money, it's positive, of course. The more they raise, the better it is. They're sitting on debt of more than 2 lakh crore rupees. Plus, they need to kickstart their 5G services, also make those investments. So larger the fundraise, better for Vodafone Idea, negative for other peers like Bharti Airtel and Reliance Jio. And larger the fundraise is also better for Indus Stars, which has receivables due from Vodafone Idea. Back to you.
Okay, thanks a lot for that. By the way, Sona BLW is the other one that is up almost about 5% on the back of the PLI news flow that came through. So I just want to pull that stock up as well. Sona BLW 5% higher there. But let's get some 9-10 calls going. Looks like it's going to be a good start to trade. Grasim is topping the charts this morning yet again. And TCS Infosys also in the green. Mitesh is back with us. Mitesh, what's the big call at 9-10?
I think looking at the Nasdaq rally and the IT stock structure, HCL Tech, I would bet for targets of around 1730-40 to begin with, and then maybe even higher levels.
Okay, all right. Thanks a lot. Okay, all right. Thanks a lot for that, Mitesh. Well, let's go across to Vamakshi on Angel One. Vamakshi, go ahead.
Well, absolutely. Angel One in focus today after the company has approved to raise nearly 2,000 crores, and this has been done to tap opportunities in the fintech space specifically, and this could be done through a preferential issue, FPO, or by a QIP. In fact, the company will be seeking approval of shareholders through an EGM that is scheduled to be held on March 15. Now, the rationale behind this fundraising has been highlighted as the company wants to augment and build financial flexibility. They want to ensure a smoother expansion of their broking business, and they also want to harness emerging opportunities across inorganic universe within the fintech space. In fact, the company has also gone further and said that its offerings would actually strengthen its super app, and in fact that would also lead to a boost in the growth. And I would just like to bring out a couple of important points in addition to this. This fundraising is coming at a time when the company already has nearly 9,060 odd crores of cash on the balance sheet as on December 23, and in fact for FY24 they've already managed to pay out dividends worth almost 290 odd crores. So definitely this fundraising is an important development and quite an interesting one to watch out for.
Makshi, thanks very much for that. There's 30 seconds to go for the market open. We're just getting there. The rupee is opened at 82.86, slightly weaker as compared to yesterday's close. The Nifty will open stronger though. The pre-opener settled 70 points higher, exactly almost in line with what the Nifty was, the gift Nifty was earlier indicative of.
It's really a Friday feeling, right, today?
Yeah,
With
Monday,
the way
Friday,
the market is
someone
moving.
would say, we already gapped up, take 80 points on the table, we bought some
And go home.
and go have a good weekend. Let's see how it works out.
Hopefully you get a bit of a dip, right? And or it's going to be one of those sort of up and up kind of a rally. But there you go, straight away, 22,268. This is above last Wednesday's high. Yesterday, the market did get above Wednesday's high intraday, but closed under it. But this morning, we are starting above it once again. So 40 points. So, a little bit of a cool off. But this is a decent start after the furious rally from the day's low that we had yesterday. The Nifty Bank is up about 0.15%, 75 points higher. We're at 47,000 there. And you got the mid-cap index, which starts about 0.5% higher as well. So all told, decent start, at least on the indices. But Sonia's got more rates. Sonia.
Oh, absolutely. It's a good start on the indices. As you rightly pointed out, the Nifty looking pretty good at that 22,200 mark. Let's take it straight to the Bank Nifty, right? That's holding on with gains of around 50 odd points. Now, yesterday, the Grasim was the big mover. So there could be some follow-on buying on Grasim this morning as well. A lot of brokerages continue to be bullish over there. Grasim up 1.5%, putting on some more weight even on the volume front. Now, Asian Paints was a bit under pressure because of, that large launch in the paint space from Grasim. Asian Paints down 1%. Jefferies maintains an underperform on Asian Paints. They have a target price of 2,500, which is well below the current market price. So maybe you could see some more pressure on Asian Paints. Yesterday, we saw auto stocks rally in late trade. Bajaj, Eicher Motors, M&M. Would be interesting to see if there's any follow-on buying. There is an Eicher Motors, and M&M as well has been a stock that has been on a tear, but today it's just about open absolutely flat. Would be interesting to see what's happening with PSU banks like SBI, because this morning, Goldman Sachs has downgraded SBI to a neutral. They have a target price of 740 on the stock. There's a little bit of pressure on SBI, not too much. But is the run done on PSU banks? You'll have to wait and watch for that. Apart from that, Vodafone Idea will be considering a fundraising proposal on the 27th of February. That stock has been moving higher day after day. Today it's up about 5.5%. So don't lose sight of that. Angel One is also in focus. It will be raising 2,000 crores via a preferential issue. So that stock is up in the green, 2% higher. Honasa Consumer in focus as Citi has initiated buy. They have raised their target price at 550 rupees a share, which is above the current market price. So 3.5% higher on Honasa Consumer. And GMDC is the other one I'm looking at. The board has approved a capital outlay of 3,040 crores in FY25. So GMDC also on your radar. But the Nifty, by the way, has opened at a fresh record high. So if you're thinking the party is over, it's not done just yet. Slow and steady to new highs, and something that is seeing contribution from the Bank Nifty this morning, up about 30 odd points. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Vodafone Idea is going to be raising money. The street is optimistic about that. If Vodafone survives, then Indus Stars gets the required money as well. So that one's up close to around 3.5%. Both of them bucking the trend this morning. You have Intellect Design, actually. That stock is up close to around 2.5% as we speak. So big uptick is what we're seeing on that one. ABB, splendid run. In this week so far, it's up close to around 18%. That stock, though, is pulling back close to around 1.5% in today's trading session. So keep an eye out on that one. Other couple of stocks that are on focus, you have RVNL, IRCON, both of them up 3.5%. And Geo Financial Services, don't lose sight of that one. It's moving, and it's moving very, very well. In this month itself, it's up, I think, close to around 25%. Big up move is what we're saying. Out there. Remember, it's got shares of Reliance Industries, and Reliance Industries itself has done so well. So, that one, in fact, is playing a bit of a catch-up out there. Majority of the share value as of now comes in from Reliance, so keep an eye out on that. Pull up HDFC Bank. Just want to make a quick point out here. Reliance Industries is moving in terms of weightage towards HDFC Bank. We had highlighted this a couple of weeks ago as well. And now the gap has narrowed to around 0.65%. A few months ago, it was close to around 4% in terms of weightage between HDFC Bank and Reliance Industries. So that's an interesting battle that's taking place. A couple of notable movers from the broader markets. IRDA, the stock went dancing away to around 215. We saw a couple of large trades at around this 160 odd mark. But today's session, it's at lower circuit, down 5% as we speak. Prashant.
Absolutely. It's a good start, right? I mean, can't complain at all. 40 points on top of what we saw yesterday. So 22,260. That's actually a good thing. You don't want, 150 point higher starts. You want slow and steady. Actually, the ideal thing is for the market to actually start slightly lower, or at least give you a dip at some point and then move higher. I mean, that's the hallmark of a strong market. For now, we are up 40 odd points, which is slightly marginally higher. Now, Jio Finance is up 3.5%. It's the top volume traded stock right now. 313 on Jio Financial Services is what we have. Indus Towers, which we highlighted earlier, Nigel was talking about that, 4% higher at this point in time. It's the second largest volume traded name. RBL Bank is up 1.8%, 271. We highlighted RBL Bank with one of the large investors picking up additional shares in that. Graphite and HEG have been doing well. I can spot Graphite with a 1% pop this morning. The ports company, JSW Infrastructure, is up 1.25%. Stocks at 247. That is JSW Infra. There is South Indian Bank, which continues to, it's having a great last couple of weeks or so. South Indian Bank is almost at about 37 rupees now. That's a big one. There's one stock called Tarmat. I'm not sure. 18%. I think it came up last couple of days as well. I'm not sure what's happening here. So 20th of February, the close was 80 bucks. It's at 130 rupees now. And today is the third day in this journey. There you go. That's the one. Look at the volumes there. 2.3 million shares. And that's the reason we are sort of highlighting that this morning. That's a big mover.
I think it's a small market cap though, Prashant. 250 crores. Even after this move is what we're seeing.
I mean, it's never come up on our, when we've, I think it's not never come up, period. But, it's coming up with volume, so it's popping up here. Very large move once again here on this one. You got India Cement, which is up. I mean, rest is routine. Nothing very large at all. On the downside, let me just take a quick look if there's anything else. IRDA is down 5%. I think we did mention that. Devyani is starting with about a 2% cut. So that's at about 161. And FACT is down 3%. That's Fertilizer and Travancore. That's coming up with a bit of a loss. Medanta is another one, another hospital name, which is down about 2.5%. Orient Cement is down 5%, but it doesn't have too much volume. So maybe keep an eye, but not to focus too much on it right now. So that's the market for you.
Just a couple of notable movers, Prashant. Nimesh is highlighting us with regard to that FTSE rejig that we saw. Gokul Das was added, so that one is up close to around 7%. That could explain that. And also, I think FACT, they've rolled back the addition out there. So that's why that stock is under some pressure. It's down close to around 3% as we speak. And Orient Cement as well, you mentioned that it was down. The addition has been rolled back for them. So Orient Cement as well as Religare, both of them could be seeing some bit of selling because of this FTSE rejig that has come. The note has come out earlier today.
I was looking for Tarmat also in that list. That's a big move as far as these changes are concerned. Gokuldas, of course, I mean, out of the ones we mentioned, is the largest sort of name, well owned as well, and that's seeing the most substantial move. That's the FTSE changes which Nimesh had been highlighting earlier. Let's welcome in Rupal Agarwal. She's joining us right now. She of course, is Senior Research Analyst, Asia Quantitative Strategy at Bernstein. Rupal, good to have you with us here. Thanks very much for your time. So let's just start by talking about quants. And, there is no real direct play on what's happening with NVIDIA and the big AI boom in the US. But maybe we could look at correlations. I'm not sure if you've kind of looked at that. But somebody earlier, a guest 2 days back, was highlighting that, US tech, and especially these large 5 or 7 names which are seen as a play on tech, India stocks and Japan, these are, highly correlated over the last 1 year or so. On the quant side, have you kind of looked at this? Any thoughts at all?
Yes, so we have looked at it not specifically from a tech perspective, but overall the kind of correlation that we are seeing with Indian markets versus US markets has been very, very tight in the last 3 years. It's not just, since the beginning of this AI rally. Japan, of course, there is a direct sort of correlation. because Japan semis is something which is undergoing this massive geopolitical support system that is being built up, and hence any kind of positivity around NVIDIA results will always have this massive boom for Japan. So there is and I think the other way to look at it is whenever tech names, which is largely your proxy of a risk-on rally in US, when that happens, we do see most of the international equities doing well. And then because India and Japan have been those two favorite markets across Asia, we do see more of a momentum building up in these markets.
Okay, by the way, it's a good screen actually. The mid-cap index is up almost about 0.5%. And if you're wondering, from the frontliners, Reliance is at a fresh record high this morning. So don't lose sight of that. ICICI Bank is at a fresh 52-week high as well. Reliance is now just shy of the 3,000 mark. It's been a very strong run. This year already Reliance has put in 15% weight. DLF is at a fresh 52-week high as well. And a couple of other names. HCL Tech is at a fresh record high, so looking pretty good. A fresh 52-week high, that is. It's looking pretty good. Rupal, hi, good morning. I was going through your strategy note, and you say that you find only limited opportunities within the PSU portfolio. Can you elaborate on that? Because PSUs have been the big thing, right, in the last fortnight, in the last couple of months, rather. Your thoughts on whether there is more to go? Would you start to get a bit cautious here?
So I think PSUs, of course, have taken up a lot of mind share. Investor money flow has happened, in these pockets. My sense is there are, yes, only limited opportunities left now. I would become more cautious towards, these names which have been very high proxies of high beta, which sits a lot in this PSU, basket. So that's where we think vulnerability are building up. But we are okay to actually still get into names which are, say, providing high dividend yield. That would be the limited opportunity set where we are comfortable adding at these levels. Most of the other, areas, and I would say large part of them will be more in the PSU banks and industrial space. That's where valuations are quite stretched. And we are seeing that there's nothing been but a proxy of chasing the very strong momentum in the market, or in fact, being completely risk on. And that's something that I'm not very comfortable chasing at these levels.
Okay, all right. Hi, Rupal. Good morning. Good to see you, Vin. So industrials, well, they're trading at a bit of a premium, but PSU banks, maybe they offer some more value. Rupal, I wanted to ask you about the Indian markets on the whole. We have been thumping the table, earnings growth over here, political stability as well. And we're going to be having another election, which in all probability will have continuity that takes place. How much of the good news is in the price, though, at these levels of around 22,300 on the index itself?
I would say a large part of it is in the prices. That's been one of the reasons we've been relatively more cautious around Indian equity since the beginning of the year. I think, the domestic flow is definitely strong. The sticky SIP flow keeps on supporting the market. But I do think that, for foreigners to come back meaningfully, we need to see valuation, coming down. And if we look at year to date, they've not been very comfortable adding at these levels. So I do think that, yes, a lot of this, positivity around India, whether it's political stability or whether it's earnings, a lot is in the prices already.
Okay, a lot is in the price already. So where do you see opportunity now? I mean, are there any spaces where you think that there could be both growth potential as well as some valuation upside?
See, we've been arguing to rotate within the market more towards your larger names, more towards your quality names. And, in the recent PSU note, for example, we've highlighted that, looking at specifically chasing the value rally, I would be more comfortable doing that through, say, the dividend yielding names. So those would be the kind of pockets to look for opportunities right now. It's not that there are no opportunities, but there are limited again. But I think that needs to be the big rotation in the market because, last year there was everything pretty much was doing well, but parts of the market were largely led by this, very strong junk rally that happened in India. We saw, of course, a big momentum, sort of push. And a lot of that is looking slightly more pricey and toppish at this point.
Okay, it's looking pricey and toppish at this point. So you're saying rotate into large cap names, rotate into quality names, and dividend yield stocks is something that you like. Got it. What do you do with some of the large cap private sector banks? Because now suddenly buying has started over there. Delivery based buying has picked up quite a bit, but HDFC Bank and the likes, what are your thoughts there? Is this a good time to be buying?
See, I can't comment on any particular name per se, but if I have to compare, the analysis that we've done, for example, on PSU banks versus, so I can say that given that most of the PSU banks don't look very attractive, that does mean that we could start see, some interest coming back on the private side. Even if I look at from purely style perspective, the private banks would be, I would say they're not in our buy list right now, but they're not in our sell list as well. So they're very moderately positioned across the multiple styles that we track. So I'm okay with adding more on the private banks.
All right. The problem, I think, Rupal, is that the PSU banks, many of them are underowned by the mutual fund industry, while on the private banks, they are topped out. And then they've gone through this painful last 6 to around 12 months or so. I guess that would be the technical factors at play as well. But Rupal, I recall when we chatted the last time, we were talking about China and how China was bombed out. And from those levels, maybe in fact, that could be some kind of a rebound. Now, post the new year, there have been signs that maybe in fact, there are measures being taken both by the government, by the regulators out there to bring some stability. What is your view on that market?
Yes, so, the last time that we spoke, I did mention that we are expecting a tactical rebound in China. Things are moving more positively there now. If you look at some of the recent data that has come out of the, Chinese New Year, we have seen, big move up in the travel data. There's, of course, a lot of policy measures which are being implemented. Investor sentiment is improving. So we are seeing some, sort of positivity building up in the market. It's too soon to say that whether it's going to be a big move where we start seeing too much positivity from investor perspective. I think most investors are taking it very slow, and that's likely to play out in the near term. But I think directionally, we are expecting the markets to continue to be more on that upward trajectory from here.
I know, got that absolutely. So, one of the sort of broad kind of this is slightly pulling back a little bit, Rupal. The consensus seems to be that the only thing working against India, right, the market here is valuations. Otherwise, and that maybe calls for a bit of consolidation till earnings catch up and numbers on the PE front, etc., come off a little bit. Otherwise, I mean, things look pretty set for the next few years. Is that your broad thesis at Bernstein as well?
Yes, valuations definitely are, I would say, one of the biggest bottlenecks for, I would say, more for global investors to really add or keep on adding at these levels in India. Even in our framework, valuations does stand out, quite stretched with respect to both its own history and, versus the premium that it typically trades to other markets. But I think at the same time, there are a few other factors. I would say earnings revisions or upgrades have actually peaked in India. So if we don't start seeing again a revival of that upgrade cycle, then it becomes difficult. The third thing would be, the kind of rate cut environment that actually the markets are already pricing in. So Indian market is already pricing its 6.3% 10-year bond yields. I don't foresee that happening in the near term. So that to me also remains one key risk, in the market. And then of course, it's more about the flow, right? So the domestic flow will provide a support or a flow to the market, but unless we start seeing major comeback of foreigners, it becomes difficult to move, quite strongly. So I think those would be the other important factors to consider apart from, just valuations.
All right. Thanks a lot for that, Rupal. Appreciate your time here on CNBC TV18. That's Bernstein. A bit cautious on the market, actually, saying that there's not too much by way of valuation upside, and they prefer to stick to large cap names, stick to quality names, and dividend yield stocks is something that they're looking at. Well, the market is not, the market is actually throwing wind to the caution at the moment. Nifty is doing okay. It's doing well, holding on to its gains from yesterday. The mid caps are really picking up pace. But Goldman Sachs has come up with their call on financials, and let's find out what they're saying. Abhishek has more details on that. Abhishek, over to you.
Goldman Sachs has come out with a report on Indian financials, and they have downgraded many banks in their note as well. They believe that Goldilocks period is over in the near term as headwinds are now increasing for the banking sector. So the headwinds include rising pressure on cost of funds, structural change in the funding environment that they are seeing, growing concerns on rising consumer leverage. There is potential asset quality challenge that particularly in the unsecured loans that they are worried about. Pressure on operating costs on account of the fact that wage inflation is on the higher side, and then they believe that banks need to expand distribution network for future deposit growth as well. However, in terms of sector valuation, it's been at comfortable level according to them. So Goldman Sachs has downgraded rating on SBI to neutral, ICICI Bank again to neutral, and Yes Bank they have downgraded to sell. In terms of upgrade, they have upgraded Bajaj Finance to neutral, and on SDFC Bank they retain their buy recommendation. Back to you.
All right, thanks a lot for that. In fact, Rahul Jain, who's the co-head of Asia Financials and head of India Research, Global Investment Research at Goldman Sachs, is with us to talk more about that. Rahul, thanks a lot for joining us. I know the run-up has been pretty sharp, right? In many of these banks, especially the PSU banks like SBI. Is that your biggest concern, the lack of valuation upside? And take us through what the rationale is over the next 12 to 18 months, specifically for PSUs.
Thank you, Sonia, and great to be on your show. I think a couple of factors that we have laid out in our report, three areas where we think the earnings are going to be facing the headwinds. Number one is, of course, the funding environment. Deposit growth is facing challenges from multiple quarters, and that's going to put upward pressure on the cost of funds. You've already seen the funding cost take a U-turn over the last couple of months. And given the fact that the rise of alternatives is giving a challenge to deposit growth, and the loan-to-deposit ratio is elevated, the banks will need to keep increasing the deposit cost over the coming quarters. Number one. Number two, if you see the credit cost, it has been a very strong and benign environment over the last many quarters. We think that that's kind of starting to bottom out. And the area where we are concerned about the most is unsecured loans. We have been writing about this to our investors that this space is overheating. RBI also took some steps around it, and we believe that this area is going to perhaps put some upward pressure on the credit cost. These two areas definitely is going to put pressure on the ROAs for the entire system. Private banks in particular had a phenomenal run over the last couple of years where the ROAs expanded significantly. We feel that now we are peaking out in terms of the ROAs, and from here, either the consolidation or moderation is going to happen. On the PSU side, to your question about it, our investor interaction suggests that the most comfortable area for the investor is the liquidity position, the loan-to-deposit ratio, etc., compared to the private banks. But given the fact that we have seen deposit rates go up even for them, it implies that the margin benefit may not be that significant. And historically, the experience on the margin management from the SOEs have been rather mixed. So we believe that the upside is limited. The stock is fairly well priced or reflecting the potential areas of excitement that investors may be having.
Right. Rahul, hi, good morning. Prashant here. The second reason that you mentioned, for I think on the private side, which you said, rise of alternatives. Do you mean money not going into bank deposits, but into things like equities, etc.? Is that what you mean?
Yes, not only equities, Prashant, but also even the government savings schemes, if you see, is having a good growth over the last couple of years. So there's a pressure building up all along.
Got it.
I would also like to quickly add one more point here. If you see the household balance sheets, the net financial assets to GDP has also been moderating. So if we combine these two pieces together, the banks will have to do a bit of a hard work out there.
Sorry, what is that ratio you're saying? Net, what has been moderating?
The net financial assets to GDP has also been moderating over the last couple of years.
I see. But sorry, shouldn't that rise with more allocation into financial assets?
Absolutely, it should. But if you see also on the other hand, the households are borrowing. So the growth, as you all see, unsecured loan growth has been pretty strong compared to the GDP growth.
Got it. Now, just to clarify the last point, for how much, because this is a hot topic, right? In terms of whether money which was earlier going into this banks, deposits, are going to equities, but specifically equities. Do you have any numbers? Have you looked at this over a period of time? What is that? Where is it at, and how has it changed over the years?
So we have that covered in our note for our investors, but there has been a significant shift. So if you see the stock of financial assets, the deposit share has been coming down. It has come off by a couple of percentage points. Even in the incremental savings on a yearly basis, the deposit share has been moderating. And it is actually well spread in other schemes also, apart from equity mutual funds. It's going to government savings schemes, it's going to insurance, it's going to in pension funds. So all of it put together is definitely posing more and more headwinds to the deposit growth for the banking system.
Okay, all right. Hi, Rahul. Good morning. Rahul, in FY24, we haven't seen any big divestment taking place in the government of India. But the hope is in the next couple of years that could very well be the case. And maybe there are a couple of large banking names which are in there, which could lead to some consolidation in the banking space. What's your view? How does it change the landscape?
Thanks, Nigel. Good question. If you see over the last couple of years, there has been a bit of a consolidation that's happening in terms of the market share, be it the deposits or credit. I guess your question is more around ownership. I'm also reading the same news article as you may have also read. The government also indicated that they're open to PSU reforms. So if the government walks down that path, clearly, the investors would look into it. We did talk about it in our note that passive flows could start, coming their way. But nevertheless, we'll wait and see how the government responds to that over the course of next few quarters.
Can we just elaborate a little more on this rise in unsecured lending? Because you do mention in your note as well that you are a bit concerned about the asset quality of many of these banks because of the rising consumer leverage that may pose, some threat to asset quality in the near to medium term. Is this largely for PSU banks? Are you concerned about private banks as well? And which are the pockets that could get affected?
Thanks, Sonia. Good question. So the unsecured loan growth has been all across. Of course, there are various pockets. There are different consumer cohorts. There are ticket size cohorts, etc., where the growth has happened. So it's actually quite broad-based. But the market share shift has been actually more towards the private banks and the non-bank finance companies. So in our opinion, and going back to the third quarter earnings also, you did see some of the lenders did talk about increase in credit costs and normalization of credit costs in unsecured loans. So we have been monitoring certain data points, be it the high frequency bounce rates, be it the consumer, be it the portfolio behavior in different buckets. All of it is pointing towards some deterioration happening in the space. And that is going to lead to some increase in credit costs or reversal of interest income as the slippages go up. So it's going to be all across the space is what our assessment is.
Right. So banks we've spoken about. What about NBFCs? I mean, if you are downgrading banks, NBFCs are lower down the line, generally in terms of preference. So what's the view there?
So we actually have been also having a neutral view on NBFCs as well. The way we see it is, and basis our investor interaction, if private banks are going to have a liquidity problem, NBFC, of course, as you rightly said, is going to go down, going to be lower down the pecking order. So they will also be facing some headwinds out there. So we prefer themes where the funding costs can be passed on to the borrowers. And that means commercial retail segment looks better than the consumer retail segment. And by commercial retail, we believe loans given to individual and smaller businesses, which is having a good cycle at this point of time, versus the consumer lending where we are seeing signs of over-leveraging. So NBFCs who are catering to those segments should be better off than the ones in the consumer lending space.
Okay. Can you just help us with how the valuations of banks are stacked up now? Is there any valuation headroom? I get your concern on the fundamentals, but how are we looking at it from a valuation perspective, both PSUs and private?
Yeah. Thanks, Sonia. Again, a good question. So I think valuations have been in the comfortable zone, by and large, at an aggregate level. But within that, if you unwrap the covers, you will find that certain banks have derated a lot more than the others, and therefore the averages have been pulled down. And that's where I think we are advising investors to remain selective. Where the valuations are comfortable, the earnings are looking visible, I think investors would be better off there. So clearly, I think the valuation at an aggregate level looks okay, particularly for the private banks. But within that, you would need to pick and choose the names where the comfort would be there on earnings momentum as well as the downside protection and valuations. On the PSU banks, of course, we don't cover a whole lot, but the valuations have indeed moved higher. And now at these stages, we see the risk reward being balanced in that zone.
Okay, Rahul, good speaking to you. Thanks so much for joining in and sharing your thoughts on the banking as well as the financial space. Wishing you a good day ahead and looking forward to having a chat with you in the days to come.
Thank you, Nigel.
Well, time to slip into a short break. Up next, we'll connect with Mr. Sunil Reddy Dodla, the MD of Dodla Dairy, to discuss their business outlook. Stay with us. Welcome back. Well, the market's still holding well in the green. In fact, when we were having that chat with Rahul, actually, we went into the red and we have bounced back from there. So still holding at around 22,250. The high of the day was closer to around 22,300. At the start of trade, maybe a couple of people said, let's book out, let's go ahead with the weekend. For the time being, that trade has worked out. Take some money off the table. Well, Dodla Dairy, as promised, is the next management on our show. The company reported a decent set of numbers in Q3. Stock has been a big outperformer in the last 1 year or so. If you pull up a chart, you'll see it's doubled in the last 1 year. Well, recently, its board approved a capex of roughly around 10-12 crores odd. But to understand what's the trajectory going ahead, Mr. Sunil Reddy Dodla, the MD of Dodla Dairy, joins us on the show. Hi, Mr. Dodla. Good morning, and thanks so much for joining in. Well, you know, Amul has completed their 50 years. And they are stating that they want to hold on to their market share and be aggressive. And it's not a profit-making organization, right? There's not so much focus on profit. I recall when you chatted with us the last time around, you told us that in your markets, you have close to 7.5% market share. How do you compete in this sort of a challenging environment?
Good morning, Nigel. Thank you for getting me on your show. Mostly what happens is this competition has been something which we have been facing and fighting for the last 20 years or so. With the cooperatives on one side, which are, they also go for profit, but the profit is distributed only to the farmer side and they look at the consumer as one. And for us, we also have to make financial profit. We do have our own set of market, which is around 30-35% of the markets are based for us. What we call them as our experimentals who have a preference for certain kind of milk products and they prefer to pick up. For example, they will pick up a company product for curd and maybe a company product for milk. And that's what we've been fighting for. Amul will have their segment. We will have our own segment. But more importantly, we're beginning to see a consolidation happening among companies. So I think that is where it's going to lead to. As much as Amul is going to be aggressively fighting for its market share, we will be fighting for our market share. And the consolidation will happen now that the smaller players will be weeded out.
Okay, the smaller players will be weeded out. Got it. Mr. Reddy, good morning and thanks for joining in. Can you help us with the metrics of the dairy industry currently? How is, the gross margins, the procurement prices, demand situation, and what's the outlook that you're looking at for the next 12 to 18 months?
Morning, Sonia. The outlook for the next 12 to 18 months, profits will be strong because the first quarter that we are looking at, what is the summer quarter, which is a good season for us. Compared to last year, this year our procurement prices are still lower. We're still getting good amount of milk coming into the system. We will be looking at good amount of profitability. Coming to growth in terms of the revenue growth will also be strong in terms of whatever we've been carrying on in the past year will continue going forward. Volume is something which we'll have to wait and watch because most of us had taken the pack sizes had come down to keep the prices stable in the earlier years. Now we'll have to wait and watch and see if we can increase the pack sizes to give the customers some relief in terms of the inflation that we had on the price of the product going up. If procurement prices continue to remain low, inventory buildups do happen. I think we will be passing on the benefit of additional profit to the consumers and we will maintain the same profit levels that we have been maintaining now.
Oh, that's interesting. So you'll maintain this 12 to 15% growth rate in Q4 as well, or would you want to scale it up? And for FY25, what are we looking at?
We will maintain the revenue growth of the 10 to 12%, Sonia, and FY25 also will be looking at the same growth rate of 12% in terms of revenue, because we also have other divisions that are kicking in. For example, our cattle feed division is kicking in a lot more. So milk on milk, we can look at the 10 to 12% growth rate, yes.
Okay.
Mr. Reddy, hi, good morning. Sorry, this is not so much a question about the company itself, right? But there was a news report which came yesterday, I think, which said that the Maharashtra FDA has actually sort of cracked down on one of the fast food outlets for using cheese substitutes. I think it's called analogous cheese, right? Yeah. Could you just explain this issue? And is this because value-added products in the dairy industry is a big growth area. That's where the margins are. ghee, paneer, cheese, etc. Just wanted to understand this from you, sir.
So basically, analog cheese is nothing but replacement of milk fat with oils like a palm oil and to make a become cheaper for the Horeca sector or the consumer who prefers it. It will be more of labeling issues that we will face as we go forward. Basically, the dairy products in the country as of now are simple, clean dairy products. There is no additions. FSSAI keeps it plain and simple. When we go forward, as the country's economic growth is coming in, people are looking at various kinds of products. For example, higher protein, whether it's going to be only milk protein or added proteins that come into the play, will be where the challenge will come in value-added products. Because to create a higher value product with a higher margin, there is a lot of possibility of product R&D coming in by using replacements for more expensive ingredients. And I think customers have to be aware of the labeling and read the label before they consume it. That is going to be the most important thing that has to happen, because government laws are very rigid in terms of labeling. But after that, the customers have to be aware of what they read on the label before they consume.
Okay. No, from a dairy company, from the industry perspective, is there any, the issue seems to be about labeling, as you said. But from an industry perspective, is there any impact at all?
Yeah, we are getting alternatives coming in, right? So we have to make sure our communication to the consumer that we are better than the alternatives, and therefore that communication has to improve from the company side.
Okay.
All right.
Mr. Durga, analog cheese versus regular cheese. How do I tell a consumer what the difference is?
No, because I mean the consumer who's going to these outlets would prefer. I mean, when it's cheese, they prefer cheese, right? And so that's the labeling issue that you're talking about as well. But in a way, this perhaps means greater competition, or is it? Because the alternatives would be cheaper, and that's why they're being used.
So, but that's where the value addition comes in. Like if you remember the ice cream war that happened, where we started saying if you don't use milk products, Amul had gone to court and won at court, which said that you can't label ice cream if you're not using milk, and you'll have to call it frozen dessert. So now it's up to the consumer. Will he prefer a cheaper frozen dessert, or will he want a more expensive ice cream? And I think consumers will get the more expensive ice cream.
Okay, all right. Let's focus on another aspect then. A small part of the business, which is animal feed, but is growing. I think you mentioned the last time around that, capacity has gone up, I think 3 times, if I'm not mistaken. And you said that in the coming year, you'll see a far larger contribution coming from animal feed. I think right now it's just around 3% approximately. So could you tell us by FY25, what should you end at? I think this year you'll end closer to around, say, 80, 90 crores maybe. And on that, you're expecting to grow another 100 crores. So for the next year, you'll be closer to around 200 crores?
Yes, sir. Yes, Nigel, it will be 200 or a little more than 200 crores, because earlier we had a 2,000 ton capacity per month. Now we have expanded it to 12,000 ton capacity per month. And I'm very confident that we'll do at least that.
So 200 crores, and what would be the utilization levels? I mean, how do you see this scaling up from there? It's still going to be a small part of your business, but tremendous growth potential, right?
Precisely. So I think we were earlier planning to get to our 12,000 ton capacity utilization over a period of 3 to 4 years. But I think right now, the way things are panning out, we should be able to reach almost 80% capacity utilization in the first 2.5 years itself.
Okay, all right. We'll leave it at that, sir. Thanks a lot for joining in and appreciate your time here on CNBC-TV18. That's Dodla Dairy and the way forward for the business. Mahindra Lifespace Developers is the next one on the show. It reported a mixed set of Q3 numbers. The Q3 launches surged 51% and volumes gained by 8%. Amit Kumar Sinha, who's the MD and CEO of Mahindra Lifespaces, joins us now to talk about that. Mr. Sinha, thanks a lot for joining in. In FY23 as well as, in FY22, your launches were pretty high. But I want to understand, what is the pipeline looking like? What kind of launches are you looking at in Q4? In Q3, your new launches went up by 50%. Will this growth that you see in FY25 be driven by the new projects or the existing executions?
Thank you, Sonia, for having me. Q4 looking solid. We just launched our Kandivali project, which is called Mahindra Vista. And happy to share that in 3 days, we sold more than 800 crore of inventory that we put out. So very solid start to Q4. We hope to build on the momentum that we have seen the past quarters and conclude a very healthy FY20. So just to address your question specifically, the first 9 months we had done 5 launches. 2 were plotted launches and 3 were extension of previous project, new phases of previous projects. And they had limited inventory. But Mahindra Vista was the brand new launch in Kandivali, the healthy price point, great product, great set of sustainability and technology inclusions as part of the product. We expect some of the other big launches to happen in later part of Q4 or Q1, which will help us attain our targets that you just talked. A very healthy portfolio that's looking like for new launches. And we continue to mine our existing launches, the new phases of existing.
So 0.62 million square feet is the launches that you did in Q3, right? Can you tell us quarter by quarter what is the expectation in terms of numbers? How much will you do in Q4? And in FY25, what are you targeting?
So FY25, we have given a target of 2,500 crore pre-sales. And this is in addition to our IC business. So I'm just talking about the residential business, 2,500. But as we have explained, our desire to grow our business 5 times, we have been designated as a growth gem by Mahindra Group at M&M level. We have improved our aspiration to be 5 times in 5 years, so 8 to 10,000 crore in by FY28. While we have given the short-term target of 2,500 crore, our goal is to start to change the momentum from the next financial year, FY25. So hopefully it'll be an exciting year to look out for. As we brought a lot of changes in the current financial year, the impact is only going to be visible in the next financial year. And quarter 4, I think you can do a simple straight line between what we saw FY23 and what we are hoping to achieve in FY25, and hopefully we will beat that straight line.
Okay, all right. Hi, Amit. Good morning. Good to see you in. Nigel on this side. You know, if you just drive down, you'll see the kind of redevelopment that's taking place here in Mumbai. And you'll have got a couple of projects, I think, in Santa Cruz as well as in Malad. As a percentage of total business, how much is redevelopment? And tell us how you see things panning out here.
Yes, great question, Nigel. You're absolutely right. We are seeing a huge amount of momentum on the redevelopment side, society redevelopment side. And given the trust our brand enjoys, we continue to get a large number of inbounds to participate in those projects. But we are careful and thoughtful about the financial side as well as what kind of product we can deliver to redevelopment opportunities. Of our portfolio today, roughly 15% or 20% is, from a GDP perspective, is likely to come from redevelopment. We're going to maintain that healthy balance. As you see, we are focused on just 3 major cities for the time being: Mumbai, Pune, and Bangalore. Pune and Bangalore are where you can do outright land purchases. But in Mumbai, given the land prices, we deploy outright, which is a small percentage, joint development, which is a large one, and society redevelopment. My sense is, as we see, as we look forward, a sense is roughly 50% would be joint development, 20 to 25% would be outright, which will be in the broader MMR area, and 25 to 30% would be society redevelopment.
Okay, so specifically on the launch in Kandivali, can you tell us how much inventory are you bringing to the market in the first phase? And across whatever other launches that you have planned for this quarter and maybe the first half of next year, what's the cumulative GDV that you're looking at for all of these launches?
Yeah. So Kandivali is a largest project for us. One of the, I would say, the inventory that we brought in is 600 units, so north of 1,000 crore. That's been brought in phase 1. The total inventory across phase 1, which has been brought in, and phase 2, which will bring in a few months from now, would be north of 2,500 crore. So that's the Kandivali project. The pipeline that we have, which is awaiting approval at different stages, including the RERA approvals that are almost about to come through, is a total GDV inventory is roughly 5,000 crore, which is the BD pipeline that we always maintain. There are some additions and subtractions that happen. I'm also excluding the Thane land parcel, which is roughly 8,000 crore GDV, because we have to get additional approvals for that large parcel of land to be ready for a new launch.
Okay, all right. Amit, your shareholders will be very happy with what all you're saying, right? Things are looking up. You're sounding very, very optimistic. But I'm a little bit worried about this entire redevelopment that's taking place. I hope infrastructure and hope everything is enough, to support this sort of supply that's going to be coming in there as well. But be that as it may, let's focus on pricing. If demand is so strong, do you think you can push through further price increases and push my dream of a larger house a little further? What's your take out there?
Yeah, no, I think you're absolutely right, Nigel. And it's a longer discussion to think about is the urban infrastructure is going to catch up with the demand that we see in the metropolitan areas. So I absolutely agree with you. And I moved from Gurgaon to Mumbai, so I've seen the constraints and challenges of both the cities, to say the least. But you're right, the price increase, there's a huge amount of demand. Post-COVID, we saw a huge amount of interest in owning a home, upgrading a home, and buying a bigger home. So all those things are very, very favorable. And the counter side is the inflation also has been not kind to all of us. But we see roughly 8 to 10% increase in pricing year on year in FY24 or F23. So it's allowing us to increase our margins to at least cover the escalation that we see on the commodity side, on the wage side. So at least we protect our margins. But the challenge of urban infrastructure will continue. Hopefully, you have the opportunity to see Mahindra Vista and some of the new launches. It will get you closer to your dream home aspiration, and it's designed really well. I'll request all of you to look at that.
Okay, all right, Amit. Been a good chat with you. Thanks so much for stopping by and filling us in with all of those details. Wishing you all the best. And it seems it's good times for the real estate sector, and Mahindra Lifespace Developers is definitely participating in that as well. Well, the markets are holding well in the green. And the stock that's really catching my attention is Jio Financial Services. Just take a look at that stock. Big up move is what we are seeing. It's up close to around 10% as we speak. It's up 22% in this week. And also in this month, it's up close to around 33%. So that's the biggest mover. And Vodafone Idea as well is moving up on rather large volumes. For the time being, we'll slip into a short break. You come back. Mitesh Thakkar will be back with us. He'll give us some trading strategies, and we'll also address a couple of the stock movers.
Welcome back. Well, Mitesh Thakkar is joining in now to tell us how to approach the markets from here on. It's actually a very good day. Look at the broader markets. The mid-caps are up 220 points and lots of stocks moving around. Mitesh, what do you do for the rest of the day? Where do you see some opportunities now?
So, it's a market which is enjoying good breadth, though I think the Nifty gains are slightly limited. But I would still bet on the long side. Persistent system has come on the radar. I think IT was already in the focus. That's open with a gap up, so that's a buy. Keep a stop loss here below the levels of 86.20 and a target of 8900 can be looked at. And the other one is Indus Tower, which with a disclaimer that I have some stock in my portfolio. So Indus Tower, I think, also open with a gap up. That's a buy with a stop at 228 for a trading target of 245.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of stocks that are moving around, and some are reacting to FTSE, the changes that they have announced, and they announced some revisions to the semi-annual index review, and these changes will be effective from March 15, 2024. Let's run you through the FTSE all-world index changes first up. In the FTSE, they've rolled back the deletion on embassy office parks rates, and so that will stay in the index. That's why that stock has popped up now. It's going to be maintained. It's going to be retained. So up close to 3%. But they've rolled back the addition on fact. Explains why fact after the hope that it's going to get added, and now it's not going to be added. So that's why fact is under some pressure today. The other changes in the FTSE all cap index include the fresh additions, and the stocks are reacting. So we should get some of them up for you on the screen. Gokuldas Exports, Voltam. You have CMS Info Systems, Archin Chemicals, as well as Bank of Maharashtra, Hudco and Lloyds Metals. All of them, they are additions, and that's why most of those stocks are doing well. While some additions, they have been rolled back, and those stocks are reacting negatively. You have Orient Cement that's under some pressure. Relige Enterprises as well has seen a bit of a knock, and there are a couple of deletions that have been rolled back. Case in point being a Nexus Select Trust. So that stock, I think, is reacting positively. But let's get in Rima to talk about the stock that's buzzing big time today. Before that, let's hear out the Aditya Birla Group chairman, Mr. Kumar Mangalam Birla. He said that the company is looking for a partner in Vodafone Idea. Let's hear out what he had to say, and then Rima will bring us analysis.
We remain very committed to Vodafone, and like we've said in public domain, efforts are on to get outside investors. And I don't know what's prompting your question. I think we remain as committed to it as we have been in the past.
Okay, so that's Kumar Mangalam Birla, very confident that they could get a partner on board, and they remain committed with Vodafone Idea. That's the reason the stock is up 9%. There's a board meeting as well at the end of this month. Their fundraising plans. Rima's here to tell us more about that. Rima, over to you.
Thanks so much for that. So 8% higher on Vodafone Idea today. The month-to-date rally now stands at more than 20%. And this is a stock which has seen a 165% rally in the last week low, which took place on 31st of March 2023. The stock is up, quite a bit. 5.7 rupees was the 52-week low. There is a board meeting, as you rightly pointed out, next week on the 27th of February. Now, the key is going to be the quantum of fundraise. The company has been unsuccessful in the past to raise some money. So how much they raise is going to be key, because that will determine their, deleveraging, because debt on the books is in excess of 2 lakh crore rupees, and also their 5G foray and the kind of investments they can make. Now, Citi says if it's done via rights issue, because right now all options are on the table based on what, the company's BSE announcement says. It could be rights issue, pref issue, QIP. If it's a rights issue, then the promoter participation will be the key. And in the past, Kumar Mangalam Birla has also indicated that 2,000 crore is what they're willing to pump in. A successful fundraise will be positive for Indus, while if they raise a very large amount, it could weigh on Bharti Airtel and its peers. Back to you.
Okay, thanks a lot for that. Well, let's slip into a quick break. On the other side, our special segment is the economy. Lata will get chatting with Samiran Chakraborty, the chief economist at Citi, to discuss what he's made of the minutes of the last monetary policy meeting. Stay tuned.